Hello everyone, welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of 50 minutes, 50 questions. So let's begin with the class today. Today we'll be talking about the area of the module A plus module B. So there would be questions from most of the area of module A and we'll be moving forward towards the MCQs now. So let's begin with it. Okay, the first question says the assets should be valued at a price to acquire them is based on accrual concept, cost concept, measurement concept, or realization concept. According to you, assets should be valued at a price paid to acquire them. What would be the amount there? What would be the concept that is being talked about here? The concept that they're talking about here is the concept of accrual concept, cost concept, money measurement, or realization. When we talk about the assets should be valued at a price with which we acquire them, it talks about the price that we pay to buy it. The correct answer is cost concept. Okay? It should be based upon cost concept. Done. So let's move on to the next question. The next question says cash book is a form of what exactly? If I talk about cash book is a form of what? Cash book is actually a form of subsidiary book. It's a particular place where we exclusively record only and only those things which are related to the area of which are exclusively related to the area of only and only the cash transactions, nothing else. They don't record anything else. That means all the credit transactions are not recorded in it at all. It records only and only those transactions which are related to the area of the cash transaction. That means cash purchases, cash sales, and every transaction which is exclusively related to the area of the cash movement. So in this case it is actually a kind of ledger. Okay? Okay. The correct answer is C. It's a kind of ledger. Cash book is a form of ledger because ultimately we are not making the cash but we are having that particular thing. Right? It is a kind of ledger. Here comes the next question. If the bank balance as per the passbook as per the cash book differs from that of the current account statement, the balance considered for finalizing the account is off. What do you mean by that? See, the point is sometimes now there is a particular difference that comes up in the area of specifically the area of accounts. When we talk about it, there is something called cash book, there is something called passbook, right? So what happens is when we prepare our books of accounts, our books of accounts are exclusively related to the area of a difference there. When we record something in the books of accounts, we record it as per the transactions which are happening. While when the bank records it as soon as they are able to do that particular transaction completely, right? There's a difference in this thing now. So whenever we record anything, it is based upon the fact where the cash book records as per the accountant, while the passbook records whatever the things are received by the bank and they record it accordingly. And this is where sometimes the cash book and the passbook, they do not match. That means the cash book does not match with the passbook. When such a thing happens, they have to prepare a reconciliation statement. So that particular statement is prepared, and when they have to take the balance which is considered for finalizing the account, it is of what? It is adjusted cash book, cash before any adjustments, passbook, or not taken into the final accounts. I hope the last part is visible. Huh? So let's look at the question properly there. I hope it's visible right now. Okay, so it says the adjusted cash book before any adjustments, passbook, or not taken into account in case of difference in the balance. When we are looking at this particular answer, the correct answer is, that is, it is as per adjusted cash book. This particular book is basically we have taken the cash book, we correct it completely, and then we find the final answer. That is, we get adjusted cash book. Done. So let's move on and talk about the next question. There is a point that material costing is rupees 700 in the erection of the machinery, and the wages paid for it amounting to rupees 400 should be debited to. The point is, we paid 700 for material and 400 for wages. So we have totally paid 1100, but this is exclusively for that particular machinery to become ready to use, right? Overall, this is what we're talking about. We want to make sure that the particular machinery becomes ready to use. So in this case, the correct answer is material account, wages account, purchases account, or machinery account. In this case, the correct answer is all these things are a part of the machinery account. Okay? Because ultimately these things are the material as well as the wages. We are paying not for the purpose of individually doing it, we are doing it exclusively for that machinery. So in this case, the correct answer is material cost of erection of machinery, and wages paid, it should be debited to the machinery account. Here comes the next question. This says that Mr. Bhaskaran, okay, so it talks about the era of Messrs. Bhaskaran and company drew a 3 months bills of exchange of rupees 6,000 on Messrs. Patel and Company. See, one particular company is issuing a bill on another company, right? You can say that this is not actually a company, they are basically partnership firms or individuals which are doing this. So in this case, what are they saying exactly? They are issuing that particular thing on 1/1/2010, payable to Mrs. Sundaran and Co. or the bearer. Here the payee is, who's the payee? Mr. Bhaskaran, Mr. Patel, Mr. Sundar, or Mr. Sundaran, or the bearer, and or the last answer is all of the above. See, the point is, who is the payee? Payee means the person to whom this payment is being made. So when we decide that we will look forward towards someone to whom the payment is being made, so how are we going to look at it? Okay, in this case, what they do exactly is, there are 3 parties overall. First is drawer, okay? Second is drawee, and payee. Messrs. Bhaskaran and Company drew the will. So in this case, Messrs. Bhaskaran is basically the drawer, and it is drawn on Messrs. Patel. So MSP is basically what? They are the one who would be, who's the drawee. Mr. Drawer has ordered Mr. Drawee to pay certain amount of money after certain period of time, and that too to him or the bearer. Matlab, either he will be the paid or anybody else. So in this case, who's that anybody else? He gave this particular bill to Messrs. Sundaran and Co. Right? So in this case, Messrs. Sundaran and Company are basically the payee. So in this case, the correct answer is C. Messrs. Sundaran and Company or the bearer will be the payee in the given case. Difference of totals of both debit and the credit side of the trial balances transferred to difference account, trading account, miscellaneous, or suspense. See, always remember when we talk about the trial balance, okay? Whenever we talk about the trial balance, there is a simple rule regarding trial balance. Trial balance is actually a statement which records all the things regarding debit and credit. In this case, they prepare suspense account when this side does not match with this side. Whenever there is a mismatch, then we will call it suspense account. Difference of the totals of debit side and credit side goes into suspense account. Next question. Inventories should be out of go down in the sequence in which they arrive. That is HIFO, LIFO, FIFO or weighted average. When we talk about the inventories is a stock. HIFO is highest in, first out. The value which is highest would be taken in, and then whatever is going out, that would be the first out. Then we have LIFO. LIFO is about last in, first out, and FIFO is first in and first out. That is first in and first out. So in this case, what would be the correct answer? The correct answer is C. FIFO. Whatever comes first would go out first. Next question. The value of an asset after deducting depreciation from the historical cost is known as fair value, book value, market value or net realizable value. When we talk about depreciation from the historical cost, see, the point is we say that I bought it at a particular price, that is cost. Every year I'm using this pen is very important for me because I'm using it to teach you and I earn through this. So this is my asset. So whenever I'm using my asset, what would happen? This will get old, this will get worn out. So what will happen? That is cost minus depreciation. Whatever is left is book value. Now this is what they are noting down. So I think I've given you the answer there. The value of the asset after deducting the depreciation from the historical cost is known as, historical cost is taken from the cost concept, while this concept says after reducing depreciation, whatever is left, you record it in the books of accounts, you take it to the balance sheet on the asset side. Okay? So in this case, what would be the correct answer? The correct answer is book value. Value of an asset after deducting depreciation is called book value. Here comes the next question, everyone. Expenses incurred to retain the title of the building is revenue expenditure, capital expenditure, deferred revenue or none. See, we are incurring those expenditures just to retain the title. The title is still with us, we would like to just retain it. That means, for example, if I've taken a particular leasehold land, every year I'll be paying the lease rental to the government, right? So for example, there's a particular example there as well. There's a particular place in our country, that is Chandigarh. When Chandigarh was, it is the first planned city of our country. When Chandigarh was built, they said that in Chandigarh the first thing that happened was, they said the property was available on 99-year lease. So the expenses that you are just paying to retain the title is what? Every year you are paying the leasehold rental. So that is revenue expenditure, capital, deferred or none. That is a revenue expenditure. When you do to acquire a particular title, that is capital. When you are just trying to retain it, it is basically revenue. Okay? Next question. Carriage Invoice is debited to trading account, profit and loss account, profit and loss appropriation account or balance sheet. Okay, carriage inward means the expenses that I am incurring to get that particular, to retain that particular thing, right? So in this case, carriage inwards is debited to trading account, profit and loss appropriation or balance sheet. Carriage Invoice is basically a part of trading account, because those expenses which we are incurring on purchase of something would be a part of carriage, would be a part of trading account. Inwards means when you are purchasing something, and if it would have been given that it is carriage outwards, then that would be considered as carriage outwards would be considered as profit and loss account. Why? This is done on behalf of a particular person to whom we are selling the goods. So this is done on behalf of the customer. So this is at the time of sales. Done. So let's move on and talk about the next question. A bill of exchange was drawn on 26/2/2023, payable after 90 days. The maturity date of the bill would be 30th of May, 29th of May, 28th of May, or 27th of May. Now let's look at the answer. Since we are issuing the bill on 26/2/2023, number one, we will not include the day of 26. That is the rule. The day on which the bill is issued, that is not included. That means we will include 27th and 28th, 2 days of Feb, right? Because 2023 is going on. This is not a leap year. Then after this we have March, 31 days. Then April, we have 30 days, 60 days over, and this is basically 62 days. That means somewhere in May we are supposed to pay it off. That will give us 30 days plus 31 days plus 2 days. We've got 63 out of 90. Technically on 27th of May our 90 days are over. After our 90 days are over, we will also have to give 3 days grace, isn't it? That is called the grace period, the time period that you give to the other person in order to recover the money. So that would be considered under what? 30th 5/2023 is the correct answer. 29th, 28th, or 27th. See, 27th is the date on which 90 days are being covered, but the due date of the bill is 30th. Okay, the correct answer is 93 days after 26/2/2023 will be 30th June, 30th of May 2023. Since we are talking about 23 now, so the correct answer is 2023. Now moving on to the next question. चलिए, if the total of all the debits of a ledger account is more than the total of all credits of the same account, then the balancing figure is placed at debit side of the ledger, credit side of the ledger, end of the ledger account, or none. In this case, what are we doing? If total of all the debits of account is more than all the credits, when your debits are more than credits, this is considered as debit balance, but it would be shown on the credit side. So in this case, the correct answer would be that B. That is, it would be called a debit balance, but the balancing figure will be always shown on the credit side. It goes like this, huh? Let me show you how does a particular ledger looks like. If the debit side is more, that means maybe I'm making an account, so there we have something here, and this is around 20,000, right? I sold goods and got money. Let's make it a cash account, right? So in this case, in this case, if I spend this money on stationery, so on stationery I spent hardly 2,000, rest every penny is with me. So in this case that would be by balance carried down. I'll still be left with 18,000 rupees. Now this carried down is basically, it is called a debit balance because ultimately we have 20,000, we just spent 2 and the remaining is still with us. This is called a debit balance but shown on the credit side. This portion of totaling is called casting, and when we take it from journal to the ledger, this is called posting, and the process of finding this balancing figure is called balancing. So these are the entire terminologies that are used in the area of ledger. Done. Now let's look at the next question. The cost of a small calculator is accounted as an expense, not shown as an asset in the financial statements of the business entity due to materiality concept, matching concept, periodicity, or conservatism. The cost of a small calculator is accounted as an expense and not shown in the financial statements. It's a very small expense. Maybe if it is a company which is working in crores, and this amount would be what? What will you call this? When we talk about the concept, see, this is a very small amount. When the amount is very very small, it's about being important, na? So if it's not that important, it means in this case, what are we going to do? What would be the correct answer? The correct answer would be the materiality concept. In this case, the correct answer is the materiality. If this is not there, na, the entire production will stop. If the production is gonna stop, that is not a good thing, na? So in this case, what would be the correct answer? The correct answer would be base stock is minimum. That is also called base stock. The other name of it is called buffer stock. So in this case, the correct answer is base stock or buffer stock. Done. Okay, now let's take up the next question. Messrs. Bhaskaran and Co. drew a bill on 6,000. Acha, we are done with this question. Huh? When we talk about drawer and drawing and everything else, right? So we are done with this question. Okay, moving on to the next question. This question is a little longer and I hope you will be able to read it right now. Under this method, the annual charge of depreciation decreases from year to year. Every year this amount is decreasing, so that the burden and benefits of the later years are shared by the earlier years. Also, under this method, the value of the assets can never be completely extinguished. The other advantage of this method is that the total charge of revenue is uniform when the depreciation is high, repairs are negligible, and the repairs increase, the burden of depreciation gets lesser and lesser. In this case, what's happening is in the beginning year, there is more depreciation, and after that what will happen? In the initial years we have more depreciation, and in the later on years we have more area of the depreciation goes on falling in the later years, but at the same time we record repairs. So in this case the correct answer would become WDV. It's also called written down value method, which has been adopted in the given case. Here comes the next question. Aditya Limited issued 50,000 equity shares of rupees 10 each. For subscription, 40,000 were subscribed by the people. Overall, if it is actually taken as 50,000 and people have taken 40,000, by paying rupees 3 as application money, number of shares allotted to the public will be 50, 40, 30 or 10. We issued 50, but people took up 40. है ना, they have subscribed 40. So for what number these people are going to pay? If the number of shares issued are 50 and ultimately the shares for which people applied for is 40, so the number of shares to be issued to the public will be 40 only. Actually, there's one more pointer in this question, that is a constructive error overall, I would say. If the shares are issued for 50,000, at least 90% of it should be taken by the people. That is, it is 45,000 shares if taken by the people only and only, then your IPO or initial public offer or your public offer is successful. Otherwise it isn't. So in this case the correct answer is the answer is 40,000 in this case. But if they ask you in the question, at least 90% of the shares issued should be taken up by the people. Okay, at least 90%. Here comes the next question. Okay, now is it visible? The trader has credited certain items on sale on approval aggregations to 60,000 to sales account. Some goods are sold to someone and we have told them, if you don't like it now, then you can return it back to me. I don't have a problem there, right? I had a word with that particular person and I said that I don't have a problem. What you can do is you can pay it to me. Of these goods of the value of 16,000 have been returned and taken into the inventory at cost rupees 8,000. So basically we sold it for 16, but ultimately it is just for 8,000. So though the record of return was omitted by the accounts, in the accounts we forgot about it, in respect of any another parcel of 12,000, cost being 6,000, the period approval did not expire on closing date. The cost of goods lying with the customer should be 12,000, 54, 6 or none. What would be the amount, everyone? In respect of another parcel of 12,000, cost is being 6,000, has been sent for approval, did not expire. Now this is again sales goods sold on approval basis only. Now I have sold the goods, but the particular person has not paid it yet or said that they would like to buy it. There is no confirmation yet from the customer, so we will record that cost only now. If you do not record it at cost, then there is a problem, isn't it? So in this case, what would the correct answer? The correct answer would be 6,000. We will record it at 6, not 12, because we have sold it at 12, but the value is still 6,000. Here comes the next question. Gaurav has to pay rupees 10,000 to Saurav on account of bill accepted by him for credit purchases. Due to the financial crisis, Gaurav was unable to pay the bill and was declared insolvent, and his state realized only 30 paise in a rupee. The amount to be debited as to be bad debts account of Saurabh will be 3,000, 7,000, 10,000 or none. See, the point is Gaurav had to pay to Saurabh, so ultimately Saurabh was supposed to receive 10,000, and the particular person said that the amount realized, he didn't get the entire money, he got hardly 30% of it. This is his estate realized only 30 paisa in a rupee. That means 30 paisa in a rupees, 10,000 into 30 divided by 100. It is 3,000 rupees was recovered. So remaining 7,000 was not recovered. Right? So the bad debts in this case would be 7,000 rupees. What is the journal entry for this? We received cash account debited. Then we have bad debt account debited to debtor. In this case it is Gaurav. Cash was of rupees, we received 3000. Okay, done everyone? I hope you're done with the question. This is the journal entry. Cash, bad debt to Gaurav. The debtor has said that he will pay 30% of the amount he was supposed to pay only. So 30% is a very small amount now. 30% is given there. Then opening inventory of the year is rupees 20,000. Goods purchased during the year is 1 lakh. Carriage invoice is given, as well as selling expenses are given. Sales during the year are of 1 lakh 50. Closing inventory is given. You have to calculate the GP. What is the amount of gross profit? First of all, let's calculate cost of goods sold. What is the cost that we are incurring? Opening stock plus purchases plus the carriage, and the closing inventory is of 25,000. So what is the amount? 20 plus 1 lakh. That makes what would be the amount of the cost of goods sold in this case, everyone? It comes out to be 97,000. Okay, and when we are trying to find GP, GP is basically your sales minus your cost. We sold these goods for 1,50,000 while our cost was 97,000, so it gives us rupees 53,000. So in this case, okay, I hope it would be visible now. Visible, everyone? Look at this. The cost is of rupees 97,000. How do we calculate the formula of COGS? COGS is equal to opening stock plus purchases plus any of the direct expenses minus the closing stock. And then whatever our gross profit would be, we will use it sales minus COGS, because in this case we are having our selling price minus our cost price. So the answer should be 53,000. All the formulas you should note down, or you can keep a screenshot of it, because these are really important. This kind of question can be definitely asked in the examination. Now let's look at the next question. The next question says Messrs Delhi Stationery purchases and manufactures and packages this entire area. I think now it is visible. They say that they are selling it at the year end, had 1,000 pieces of toilet soaps in hand. Purchase price was 3.25. They are not yet packed. They are not yet packed and neither labeled. The packaging cost per unit is 0.35 and the selling price is 4.25. The historical cost and the selling price of the closing inventory will be. See, the point is, if we look at the price there, this is the point where they are testing us. The cost is what? We haven't spent this 0.35 yet, isn't it? That's the truth. So in this case, I would have spent 1,000 multiplied by 3.25, that is rupees 3,250. This is my cost till date, as the packaging is not done yet, right? So in this case, one thing is sorted. So the answer should be 3,250. So now we have 2 points there for 3,250. Remaining 2 are eliminated. And then we have selling prices 4.25 multiplied by 4.25, that gives 4,250. because they are asking about the total selling price. Now it would be 4250, right? So in this case, the correct answer would be 3250 and 4250. Done, everyone? Now comes the next question. That's a little lengthier question, but a very interesting question, as in this question we can do much more in terms of the concepts there. The capital is given, computer is given, air conditioner, and they are asking, given below are the ledger balances, the total of the trial balance would be, what would be the total of the trial balance? In terms of trial balance, what you need to do is, either you take the debit side, quick partner, or either you take the credit side. Either you find all the debit side items or you find the credit side items, and you can calculate the total of the trial balance. You don't have to calculate it in deep manner. So in this case, we are given the capital. Capital is of rupees 4 lakhs, right? I am taking the area of exclusively the credit side, since I want to do it jaldi, I want to do it as early as possible. So what do? Capital is 4 lakhs. Only the credit side items. Computer is an asset, so not included. Air conditioner is an asset, not included. Furniture is again an asset, not included, so I'm not keeping it again. Fixed deposits, again an asset. Salaries and expense, which is on the debit side, again a debit side thing. Fee received, 12 lakh. I think I can note it down, because the fee received is of rupees 12 lakh. It's an income, so it should be credited. Traveling expenses, 1 lakh 50. Rent, 2 lakh 40. Cash balance, all these are asset side things. And we have a bank OD as well. That means I have a mini loan from bank, which is of 95,000. So overall we have got 16,95,000 comes out to be my total on the credit side. And if you do that correctly, I hope you remember that the debit side is equal to credit side. So if I've prepared the credit side, so automatically my answer will also cover the debit side as well. So it doesn't matter if I calculate the question from the credit side or the debit side. The answer should be correct, and I should know what are the credit items and what are the debit items. So in this case, what would be the correct answer? It would be 16,95,000. This is how we show it, everyone. Have a look at it. Capital is given and 12 lakh is given. All the debit side items are here. Computer is 25,000. Air conditioner is 1 lakh. Then we have fixed deposit 2 lakhs, salary 8 lakh, then traveling expenses 1 lakh 50, 2 lakh 40. So these are the entire thing. I think the best thing is you solve this question on your own and you actually calculate the entire portion, whether your debit side is also coming for 16,95,000. This kind of question will help you to understand the conceptual part of these things, because this is really important. Next point, the cost of physical inventory is given as 2,80,000. Okay, they are saying that there is a physical inventory that we are having right now, and they are saying that the cost of physical inventory is 1,20,000, is held by the consignee. So this is a part of consignment, so I think I am leaving this part. Okay, consignment is not a part of your syllabus there. Achha, let's try this question now. Out of the 4 floors of a building, ground floor is used as a storehouse for trading the goods. First is for the goods. Second is used for the office purpose. Third is for residential purpose. The total depreciation for the building is 80,000. The depreciation of building to be known in the books of accounts would be what? There are 4 floors. Among the 4 floors, ground is exclusively used for trading the goods. First and second is used for official purpose. That means out of the 4 floors, 3 are used for the business, and 1 is not used for the business. So 80,000 is the depreciation for 4 floors. What is the depreciation for 3 floors then? It would be 3 into 20. Technically, see, the entire house is not used for business. isn't it? So depreciation should not be for the entire house in this case. So in this case, the correct answer would be 60,000. The depreciation should be recorded only and only of the house, for nothing else. Here was the question. I hope the question was clearly visible, and the answer is this. 80,000 multiplied by 3 by 4 gives us 60. This is exclusively for the business. Here comes the next question. Bill of 10,000 accepted by Rajesh was endorsed to to Dinesh on account of final settlement of 10,500. The benefit of 500 retained earned by Ritesh was credited to the discount allowed, credited to the discount received, credited to rebate account, or not shown in the books of accounts at all. See, the point is we are talking about the bills of rupees 10,000 accepted by Rajesh was endorsed by Ritesh to Dinesh. Achha, in this case what we are having is there is a bills receivable, bills accepted by Rajesh. That means Rajesh is saying that I accept the bill. Rajesh is here. Endorsed by Ritesh, this was the person who has drew the bill, who has drawn the bill, and this has been given to Dinesh. One of his creditors, that creditor, I cannot pay you money, just take away my bills receivable there. So in this case the benefit earned by Ritesh was, what is the benefit that Ritesh is earning? The benefit was of rupees 500. If you are receiving the benefit, then it would be credited to the discount received. It would be a part of discount received. Okay? Since we are receiving the discount, it's an income, so the income should be credited. Okay, I'll just correct the answer there. This amount should be on the credit side. It is basically a discount, so the nature of the discount is always on the credit side. So the answer is B. It is on the credit side. Next question. If we purchase a fixed asset on credit basis, is recorded in cash book, purchase book, journal proper, or none of the above? If we purchase a fixed asset on credit basis, in which subsidiary book will be putting it? It is not a cash book because there is no movement of cash. There is no goods that we are purchasing to. It would go to the journal proper, because journal proper says whatever that couldn't be recorded in the books of accounts, I will take it, I will keep it with me. So in this case the right answer would be the journal proper. Next question. It is generally assumed that the business will not liquidate in the near foreseeable future because of dash concept: periodicity, materiality, matching, or going concern. In this case the correct answer would be going concern. Men may come and men may go, but the organization is here to stay. That is what this particular concept talks about. Okay? It talks about the future of the organization. So the correct answer is going concern. The correct answer is going concern concept. Done? Now let's look at the next point. The purchase return appearing in the trial balance are deducted from sales return, capital, sales, or purchases. The purchases which are returned, this is basically not a part of sales return, not a part of capital, even not sales, because we are purchasing and returning something. It has to be considered from the area of purchase return. So it should be reduced from the area of purchases. Now what would be the correct answer? Among the following, which is correct? Capital is equal to assets plus liabilities. Assets is equal to liabilities minus capital. Liabilities is equal to capital plus liabilities, or capital is assets minus liabilities. This is the balance sheet equation. Okay? So when we talk about the balance sheet equation, it says that our capital is equal to assets minus liabilities. Okay? Normally the formula is capital plus liabilities make assets. That means all the assets are either bought with our own money or the money that belongs to the other people. So we'll record it as assets there. So in this case the correct answer is capital is equal to assets minus liabilities. Okay, so we have done a lot of questions today. I hope they were helpful for you. So this is where I end my session, but before I end my session, I hope you have reviewed our courses there, and if you haven't, then what you can do is go ahead and check out our courses that are available on Adda 24/7. Right, so let's talk about it there. Let's go on to our website, that is www.adda247.com. As soon as you go on to the area, go on to the area of JIB and CIB. In the area of JIB and CIB, what will you find? In the area of JIB and CIB, you will find the JAIIB CIB Kamaha pack. Right, you can take this particular pack. In this case, you will get double validity. All you need to do is you have to use the code MOON80. Okay, I hope it is visible now. That is MOON80. That is the JAIIB CIB pack is available at 81% discount. All you need to do is use the code MOON80 and you can get for 11,577. While if you want to take up only the JAIIB Maha pack, that is also there. Double validity is available. If you buy it for 6 months, you will get for 12. And if you are looking forward towards JIB and CIB, this is available for 12 months and then you will get it for 24. One of the best options to look forward to, because this doesn't only cover the JIB but also CIB. Not only the English medium batch but also the bilingual batch. Not only the syllabus batch but also the revision batches. Not only the current batches but also the previous batches that have already been done. It includes 1100 hours of online live classes, test series, ebooks, and the videos which have already been done. So there are a hell lot of things that you will get in this case. Plus one more thing is there. You get marathons, mini marathons, mega marathons. Along with that, you will also get the area of the mock test paper plus doubt sessions that we are keeping on second and fourth Saturday. So if you're looking forward to it, then what are we thinking about? You should really take it up as early as possible, and at this point of time maximum discount is available, so hurry up and you can purchase it on our website or on our app. It's way better you go through the app because there you get an additional discount of 81%. So hurry up and check it out on our website or on our app for further details. Thank you.